Welcome back to the SteadyTrade Podcast, everyone. Back with Matt McCall. I am Tim Bohen. We got something, very interesting topic. We're going to, I think, as we were discussing it, getting ready, we may kind of veer off a few paths here. But one thing that we're noticing, and a lot of the data is backing it up, is a lot of these consumer staple names, et cetera. I just got restocked, by the way, Matt. So I'm all loaded up for the podcast. So if you wonder why Altria just keeps hitting and NPM just keep hitting 52-week highs, here we go. So anyway, we've seen a big rotation into a lot of these, consumer staples names, kind of a big shakeout in a lot of the discount retailers, though. Big Lots just went bankrupt. Dollar General is down like 30%, but there are a lot of opportunities in there. And it's kind of something that I've been seeing a lot with these names. And, as always, we're trying to keep you kind of ahead of the trend. So as always, I'll kind of kick it over to Matt. He puts together all of the killer data, et cetera, to kind of, break this down to get us started here.
Yeah. Thanks, Tim. I mean, consumer staples in the month of September hit an all-time high, which everybody thinks about this year, and everybody thinks NVIDIA, tech stocks, right? Crushing it. And believe it or not, the consumer staples ETF, which is XLP, is more than double the gain of XLK, which is a technology ETF.
Interesting. I did not overlay them. Yeah.
But I will say, if you take a look back in early July, XLK was up about 23%, and XLP was up about 5%. So this has really happened in the last 2 months or so. But we're seeing a massive shift. If you look at a chart of XLP, which is consumer staples, it's a nicer looking chart. It's slower. It's like the tortoise and the hare.
Yeah, beautiful.
It's the tortoise, right? I mean, it is nice looking. But you think about consumer staples and people think, you think food right away, you think maybe like a Kraft or something like that. But it really ranges everything from a Walmart, largest retailer in the country, discount stores, to household personal goods, Procter & Gamble, everything in your kitchen and all the cabinets and stuff, to beverages, Pepsi, to Philip Morris, Altria, tobacco. Those are all considered consumer staples. So, I always think about it. It's the things when you have a recession or you lose your job, you can't cut out, right?
You need food. And that's kind of the point I was kind of trying to. You said it better than I did. Like at the end of the day, like you buy a Lamborghini when you get the big bonus, but when things go bad, you still have to buy things. And you're
still buying toilet paper and food, right? And cereal for the kids, whatever the hell you're eating, for vegetables. So yeah, you're still got to put food and drinks on the table. And the reason I like this topic is because within consumer staples, there's a lot of little niche sectors and trends, and not all the trends come to fruition. But if you think about, and we're going to talk about one in a second, which has to do with drinks. You look at the biggest winner over the last 30 years in the S&P 500, and I think you probably know this. People have talked about it a lot. I've talked about it forever, is Monster Beverage. And you think about it, like I'm not a caffeine guy, so I've never tried a Monster personally.
Yeah, I remember them being
7-Elevens as kids.
I just mainline coffee. I'm like,
I always thought about Monster, and I know that the recipes has changed over the decades, but as just being sugar-laden, high energy, kind of those little pills you'd buy at 7-Eleven to get you energy for the truckers. Like, it just seems so unhealthy to me.
Yep.
Yet it became a huge thing. I think NASCAR kind of helped it, right?
Yep.
But yeah, the biggest winner in the S&P 500 is a sugary energy drink in the last 30 years. That's
interesting. I did not know that.
But you'd be amazed to see that a lot of stocks in there, Tim, actually deal with the consumer, believe it or not. Which is why I want to talk about this topic, because I think there's another little niche sector in here that's going to do real well within this area right now. So I think it's fun too, because we can all kind of relate to it. When we talk about AI data centers, a lot of us can't understand it.
Sure.
We all understand consumer staples, right?
Yeah. Yeah, and so I'll kind of jump ahead. So like the trend one you have is like the hydration and electrolyte drinks, kind of like I'm sure Monster is kind of in there. But it's kind of wild, this chart you have here of the growth. I mean, it looks like the growth of AI is almost what this chart looks like over the last, few years and into the future. And it's, I was running errands this weekend, and it's kind of funny because I didn't even know we were going to do this topic. But I run in the party store to get some jerky and some, water. I'm pretty much plain guy. But and it's just wild that, I mean, there's like 40 feet of cooler space that's devoted to these drinks. I'm like, some of these names, I don't even know what they are, but like, I mean, it's literally like 40 feet. And it's like, man, obviously there's demand for these things because that cooler space is expensive. They don't just put it there to have it there. And it's kind of funny because it looks just like this chart, really. So,
yeah, I know. When I saw this, I was like, holy smokes, it kind of blew me out of the water. I want to make a correction here real quick. My chart I had was as of last year, wherein Monster was number one. I have an updated one now through May. Monster is actually number three. NVIDIA and Amazon passed it with those huge moves in the last year. So, but still, I will tell you this. If you invested $10,000 into Monster when it went public in August of 95, that $10,000 would be worth just under $20 million.
Yeah.
To put in.
And I think the point is still valid because
the point
exactly. You were trying to make is you're talking about an energy drink here. Like, again, I don't think any viewer, me included, would have been like, oh, it's number three behind NVIDIA and Amazon. I don't think anyone would have well, unless they'd seen the stats, would have thought that a beverage company would be number three. Yeah.
Yeah, exactly. Yeah. I mean, I will say you talked about Altria, NVR, which is in there, considered household durables. That's number four. So my point is, you don't really have to think about just pure tech stocks in your portfolio. That you have to be diversified. I think we both get pigeonholed. I think you get pigeonholed as a penny stock day trader. I get pigeonholed as a tech guy, where we both do a lot of things, right?
Yep.
And you have to kind of think outside the box. For you, you do swing trading. You're a great swing trader. It doesn't mean you're just doing daily. So that's a big difference. And me, I do outside. I look for consumer staples. I look for utilities. I look for whatever the hell the opportunity is. And I think you're the same, Tim, in the trading world.
Yeah, and what I like about this sector, and thank you, but yeah, and I agree. But like what I like about this sector is, and we were kind of chatting about this at the before the episode, and I'm actually very encouraged recently, and there seems to kind of be this shift towards a much more healthy mindset. A lot of I'm actually kind of encouraged, and I'm not a teetotaler, as they say. But I'm actually kind of encouraged that there's kind of this little bit of a cultural shift away from, as much alcohol and towards healthier options, more diet, more exercise, more healthy drinks, etc. So it's that's what I kind of like about this is these hydration drinks and all of these, and again, some of them are dubiously healthy, but like the idea that people are gravitating to that stuff versus over, the vice options, I guess I would say. Mm-hmm. So.
Well, if we take a look at the global electrolyte drink mix, hydration drinks, whatever you call it, you call it whatever you want there, about $42.6 billion market cap here in 2024, but by 2034 up to over 74. So it's a big run. If you look at just the U.S. in particular, about 12 billion here in 2024. By 2034, nearly 22 billion. So you're looking at growth of 80 to 90%. In the next 10 years.
Which is, again, I kind of keep going back there, but that's like AI like growth. It's like, so like you don't, back to Matt's point of, you don't have to be pigeonholed in penny stocks or this or that. You also don't have to be pigeonholed in tech, which is, last few years, people are like, well, if I'm not trading tech, why am I even bothering?
When I do my deep research on trends, I have a couple weird things I look at. One, I like to look at the Google search volume because, I might think people are doing something, but Google doesn't lie. If you're thinking about it, you're going to Google it. I Google everything. And you take a look back to 2020, the three that they highlight here: electrolyte powder, hydration water, electrolyte water. All, again, we'll show this chart to everybody. Lower left, upper right. Everybody's been more interested in it. And I'll say, living down here in Nicaragua, it's hot. So I drink at the local tienda here I walk to, they sell Electrolyte, which I always thought it was more like Pedialyte, but it's a little different. So I did some research into it because I'm like, I buy a lot of this stuff. Like, what the hell, what's it all about? And it's actually owned by a Mexican company that is the largest pharmaceutical company in Mexico and Latin America called PISA Pharmaceuticals, PISA. It's not publicly traded, unfortunately. However, what I found, Tim, was that they actually entered the U.S. market back in 2014, but they signed a distribution deal last year with Keurig Dr. Pepper, which is publicly traded, KDP. And now Electrolit does about $400 million in annual retail sales in the U.S., seeing double-digit growth. It's the 5th largest sports drink brand in the U.S. It's already dominating Latin America. So I thought to myself, Latin culture is so big in the U.S. right now. I know Electrolit, so I buy Electrolit when I see it. When I go to Miami, I'll be there in a week. When I see stuff like that, I'll buy it because I feel it's a brand. The brand's getting big. I see it everywhere in the United States now. That maybe you look at Keurig Dr. Pepper. So I looked into the stock. What a nice looking stock this is. ADP.
I was about to just jump in. Like, listen, you kind of mentioned, that the swing trade strategy that I use and as well as I teach. Like, KDP is like a perfect example of this because back to Matt's research, you've got this like growing trend. You've got one of the key things that we look for is that kind of like that hot sector, we call it, like the thing that people are excited about. Again, it's electric vehicles, it's EV or AI, like those are kind of the past ones. But when you start seeing these Google trends, like that is very pivotal because most of the people that I work with are kind of newer traders, so they have small accounts. So a lot of the time they can only take one swing trade, maybe two, okay? So one of the core points we look for is that exact Google search you look for, because what we want is more of that consumer interest, more of that, zeitgeist, as you say, where people are like interested in this thing. And then you have a beautiful, absolutely beautiful breakout chart like this. So now a lot of people that maybe aren't in the stock market, they start seeing this stuff, and then they all of a sudden they hear about it, and then they become buyers because they like the product, et cetera. And that sets up those kind of very solid, shorter term, with swing trading, we're talking typically like weeks or months, we're not talking multi-year, but it really just sets up a great opportunity because you've got a beautiful chart plus a hot sector, a buzzwordy thing that obviously Matt showed people are interested in. They're Googling it. That's, I'm sure any of you, like he mentioned, if you're interested in anything, like, what's Zin, okay, you're probably going to Google it, okay? So.
No, you're right. Looking at this kind of hydration market, other ones pop in. You always think Gatorade, of course, right? Which is PepsiCo, PEP. That's about 46% of global sales. So they're still big. They've launched Gatorade water since then. They've launched a couple other kind of spin-offs of Gatorade, low sugar, that type of thing. It's funny, if you think about the old school, I played football through high school and college. You had Gatorade back then. That's when it kind kind of got big. I guess it was back in the mid-90s, right?
Oh, yeah, yep.
Yeah. And, it was
glass
like yellow.
bottles, back in the good old days. The glass
remember it was bright yellow, though, like the original flavor. I think about that now, like I had one probably in the last year. It's so damn sugary, compared to what we thought. Where a lot of these hydration drinks these days are much less sugar, much better for you. They have all the electrolytes you need to truly get rehydrated because, dehydration is an issue for athletes. Don't forget Coca-Cola has Body Armor, Powerade, vitamin water. And then I'm going to throw in a fourth one kind of here in my little basket for hydration is Vito Coco, which is COCO, about a $1.5 billion company, a little smaller. It's a company I recommended years ago for a newsletter, did really well for us. Been going sideways here, but this is one to keep in mind because coconut water is a great natural hydration.
What I love, like this is a good one. Like a lot of people might be like, oh, Tim's going to hate this chart. I don't hate it. Like Matt mentioned, very sideways. What I actually like these charts because these are just beautiful ones to like set alerts on, because you look at this thing, it's tried to break 30 over and over and over again over the last year. It just can't go. So it's just a great example of like, if you like this theme, like we're talking about, if you agree with the idea, like you can just set alerts at 30. And if it really breaks out, then you don't have to kind of look at it every day. So I actually like these sideways charts because when they do break out, there's all this pent up demand because all these people that have been waiting for that breakout. So yeah, totally sideways, pretty choppy, but just let the alerts do the work for you.
Yeah, take a look at long-term chart when it went public in 21. You'll see it was a very similar pattern from 21 through early 23, between basically 16 and 8. And then when it broke, it ran up to 30s. And really now, outside of one little pullback in the first quarter, It's basically between 24 and 30, right? You take out little anomalies, but between 24 and 30, that's a pretty tight range. Maybe you buy a 24 tight stop, break below 30 right there. So yeah, you're right. This is one that requires massive patience, but when it makes its move, it's going to be nice.
So next kind of topic is like healthy eating. And again, we talked about this before. Like I really like what RFK is doing. Well, hopefully he can achieve his goal. I'm sure many listeners might know, they might not know, but JFK, his uncle, was very, very, very focused on like health and like making a strong physical America. I believe he established the presidential medal of fitness, which is gone now, by the way. Kind of annoys me, but I'm sure some schools still do it, but like when we were kids, like you had to do it, like you were required. Push-ups, pull-ups, sit-ups, like it was, you might get a terrible score, but you had to do it. So I'm actually excited because as we talked about earlier, we're kind of seeing this shift towards a healthier mindset, away from kind of just this whole, hey man, just order some Uber Eats and sit on the couch, to maybe that's not the best way to live. And again, if RFK keeps hammering it, like I think that hopefully he can kind of get that into the culture more, where I think we had it back in the 60s and 70s and 80s, and it kind of went away. But
no, I agree. I mean, you and I, we've talked about this a lot. We don't have to get into this again, but we've talked about longevity, and the key to longevity is just moving. You got to move. I mean, you got to be able
to
eat
less, move more,
and hang. You got to be able to hold yourself up on a dip. Like you don't have to be able to do 20 pull-ups. I get it, but just be able to hang for a while. Like just little things of, grab 2 dumbbells and walk around. Like it's caveman ways. Just move.
And I don't think I've told this story on the podcast, but I've always kind of pretty much taken care of myself. But like the last 5 years, like I really got aggressive into, like making a point to really focus on my health. And back to Matt's point, I will tell you this, guys, and not to get like too personal, but my dad, one of the bigger reasons I decided to focus on my health so much is my dad, great dad, worked, he was a factory worker, farmed at night. Like this guy worked his butt off. But the last 5 to 10 years of his life, man, it was bad. Like could barely get out of the chair. Like, and as a farmer, like he would like see the people doing the fields and man, they just beat him down because he like literally couldn't do it. And a lot of that was, and he's passed now, he just did not take care of himself. Now he provided for his family. He did everything. He was a great guy, well known in the community as one of the most honest guys ever. But did not take care of himself. And I was like, you know what? I love him, but I'm not going to spend my last 5 or 10 years sitting in the lazy boy wishing I wouldn't have made these choices,
Mm-hmm.
So.
Yeah, sometimes it takes that older generation for us to see it personally, right? To kind of get us moving there.
So that being said, you got some ideas here. We got some small caps even in here. I kind of like the looks of some of these guys.
I want to talk about one, then a second one I'm going to throw to you, and we'll find out exactly why in a second. But first one is a big name. It's a European name, Danone, D-A-N-O-N-E. Trades here as an ADR as D-A-N-O-Y. Great looking chart. I mean, if you take a look over the last year, real nice chart, breakout here in August. This is a company where its focus is, it's healthy. It's more on it's health conscious brands, but you think about yogurt. Yogurt's a really big thing for a lot of people. I'm not a big yogurt fan, but Activa, Oikos, Alpro, but they do have infant nutrition division as well. So this is a company that's very well diverse. Over half the sales are outside of Western Europe, so it is a truly international company. A lot of sales here in North America, as you know, a lot of the brands I just mentioned. And again, nice looking chart, 3% dividend. This isn't a company that's going to give you the 10x or the 5xer, but you need some stable companies in there. It gives you some exposure that just moves along, 3% dividend with the 10-year down to 3.7. It's pretty damn impressive. So that's one I just think is, I want to start with a kind of a big name to throw in. Small cap name, this one came up because I kind of remember when it went public, And then I looked at the chart and I thought, oh, shoot, we got to talk about this one with Tim because of the move it's had as of late. This is Laird Superfood, LSF. Laird, I live in front of one of the greatest surf breaks in the world right here. Laird was one of the greatest surfers ever. But the chart is what we need to talk about, Tim. This was down around 75 cents in March. We're up to 3.25. Eventually, a few months later, 6.25 back down to 3.5. What the hell's going on here?
So and this is what I love about this podcast, and hopefully the viewers like as well. I did not know, there's thousands of stocks out there. I did not know this was publicly traded. And it's on the Scamex, as we like to say, the American Stock Exchange. So huge fan of Laird and what they do. Actually, it was funny. Like I was listening to an Andrew Huberman podcast the other day. He promotes all their products as well as Sean Ryan. Sean Ryan actually is an investor. Sean Ryan podcast, another great podcast. This flew under my radar simply because of the volume. Let me look. The average daily volume is 100,000 shares. So like people might be like, oh, like Matt's like, man, this has got to be on Tim's radar because it went from, 70 cents to $5. Completely flew under my radar because the daily volume is just so low. But man, yeah, this is like an absolute bread and butter penny stock chart, man. Like we love these charts. 7 million float. So, like today though, the bummer is today, here we are, it's almost 11 a.m. It's only traded 8,000 shares. So this is actually, I'm going to keep an eye on this because if we can get volume days like it had, basically way back in March, it traded 16 plus million shares that day. If we can get that kind of volume with that kind of float, and I love this idea, like this could be an epic day trade. So what you guys want to do it, actually, I'm going to do it right now. And you can do this in pretty much any trading platform, is I'm going to set an alert for the daily volume of 1 million shares, okay? And that is significant because the float, again, 7 million shares. So until it starts churning through that float, it's an ignore. But if you can get that alert that this thing starts, whether it be because of news or a pump or whatever, it is on the American Stock Exchange after all, like pay attention. So thank you for this. Yeah. Because, again, the volume, can't trade it today. 8,000 shares, like you can't trade it. But if it starts getting the volume like it did back in March, hell yeah. So,
yeah. So, like you couldn't do this with your subscribers. It's 8,000 shares is about $25,000 worth, right?
The
so
whole
if you have one
daily
person
volume,
coming for 25,000, yeah, you double the volume already throughout the day. And yeah, I understand. I just want to throw out there because I'm a fan of his. I've tried
too.
some of
That's
his,
why I kind of get excited about it. Yeah.
Yeah. And when I drank coffee a couple of years ago, I used to use some of his creamers, and it's pretty good. It was made with coconut, so there wasn't really sugar in it. So it was made with coconut sugar, which is much healthier. But again, on the MX, the way this thing is traded, I wouldn't buy it as an investor. You said, as a trader. There's something going wrong here. I don't know what it is, but something a little fishy. I didn't even look into it because I saw the action. I thought, well, I don't have to waste my time.
And listen, Laird, I know you're a big fan of podcasts if you're listening right now. What happens with these things is typically like they get these people that come to them, they take them public when they probably shouldn't be public. And then, and then this happens. But anyway, hey man, maybe there'll be the one big success story that goes from the Amex to the NASDAQ, et cetera.
You never know, right? I have a huge list here. I'll throw out one more though, and that's Simple Foods, SMPL, and kind of a similar chart to Cocoa, where for the last year and a half or so, it's been in a range between about 31 and about 40 on the upside, give or take. The lower end of the range of 33 now. But, it does Atkins brand, Quest brand. I used to eat the Quest brand, but I don't like the taste of it anymore. It kind of gives me a stomach ache. But I'm all for kind of low carb diets. And I think this is, they have some nice brands out there. So it's another one to keep an eye on.
And I think you think of like the Atkins name. I'm sure many remember, about 10 years ago. that was the thing, yep. and that's what you kind of watch for, is if Matt and I are, we're kind of, I don't know if we're predicting or hoping that we kind of continue to see this healthy trend. you'll see a lot of those names come back. And listen, I'm sure everyone on the podcast knows the Atkins name. And kind of going back to the core point of what I do with the swing trades is you like that. Like you like these names that people recognize and they think of them as investments, which brings in buyer interest, which pushes the stock higher. So
yeah, so I think it's just a mindset here we want to get across in this show as well. This episode is, you don't always have to look for the next AI stock or the next, quantum computing or flying cars. I love all that stuff, but there are other ways to make money and really great opportunities out there that can be in the consumer staples area, proven by history, proven by trends we see now. Run one quick one. I'll bring up that the stock that's gotten crushed as of late, but even Celsius, CELH.
It's funny. I was going to bring that up. Yeah.
Back in 2011, that stock's a 9-cent stock. Went up to nearly $100 12 years later from 9 cents. So just think about that.
Yeah, and Celsius is another one that, again, another great brand recognition. It's just been crushed lately, but it's another one I think keep an eye on because
I agree.
It kind of looks like it's, never try and pick a bottom, but it kind of looks like it's bottoming here a little bit. And if you can, you'll kind of look for lifts off of that. And then, back to that old technical analysis idea, you set your stop at a breakdown and, if you're wrong, you move on. But it kind of looks like it's trying to put it at the bottom. It's funny you brought that up because I was going to if you didn't.
Yeah, there's something, I've never had a Celsius, but I know how much people love them. And
Tim Sykes, our friend Tim Sykes is obsessed with them. Like, I don't know if I have seen him in the last 2 years without one in his hand. Yeah.
Wow. And they're not cheap either, but then they have a lot of space. So it's a company, I'd keep an eye on. I wouldn't try to pick the bottom here, but I think you see a base built and you look at the chart, you could find some support here at $30. And if it does, I'll tell you what, not a bad area to throw some money.
Cool. Well, yeah, I mean, and thank you, Matt, again, for all of the research. And listen, guys, this is like a lot of you see me it's real. Like a lot of this stuff, man, there's so many penny stocks every day. There's so much going on that there's a lot of this stuff that you just don't know about. And I go back to some of these charts of like the Monster being the number 3 and all of these like great charts. Like, don't get pigeonholed. Kind of going back to Matt's point about me, it's like, sure, I'm kind of known as a penny stock day trader, but it's not all I do. Much like it's not just always AI. It's not just always tech. And, especially if, you're kind of like looking to diversify, the nice thing is odds are like if you got exposure to consumer stuff and AI, if one of them gets a little haywire for a while, they're probably not going to move together. So like you can kind of protect yourself a little bit. So, and thank you again, Matt. Like I always love this stuff because, man, your research is top notch. I'm just a day trader. I just look for pump it notes. It's like I'm Googling executives' criminal records all day long. I'm like, okay, this guy's only got 6 felonies. Okay, like hey, maybe we'll day trade this thing. 7 felonies is my cutoff for a day trade. So,
I love it.
Well, thank you, everyone, and thank you, Matt, as always. And I know I mentioned it every podcast, but drop us those comments, drop us those questions. And we'll see you on the next episode of the Steady Trade Podcast.